Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Monday, October 2nd, 2006, first day of the fourth quarter, and it was an ugly day for the bulls today. Looking at the daily chart of the Qs, though, we can see that this uptrend is still definitely valid. We haven't done any damage to the uptrend. However, as I said in yesterday's video, it was getting difficult to find any really good ideas on the long side, and after having an extended market, and perhaps maybe that market got a little bit overdone on the upside due to some of the window dressing at the end of the last quarter. But we were seeing signs of distribution on an intraday time frame, on the 10-minute time frame here, and I was saying that basically we were looking like we were in a range until we broke above these highs right here or below these lows, and the market came down below that level and dropped very hard. You can see how it fell initially below the 5-day moving average, rallied up to that, and then we had a very hard sell-off from that level. So if we take a look at a 5-minute time frame, you can see that with some more clarity. Here's the 5-day moving average, that brown dotted line, and you can see how that acted as resistance today. So if we look at the 1-minute time frame, you can see that initially it was rough going, but then the buyers came in and pushed the market back up above the daily VWAP, and it looked like maybe they were going to try and hold things. But then later on this afternoon, about 1:15 or so, the market did drop back below that daily VWAP, and then it was lights out from there. We had a very nice sell-off. Took about 45 minutes for that to occur, and then the market went sideways from there. So all in all, for the Qs, I still think that the market got a little bit extended. So no damage done until we get down probably below these recent lows in here, 39.5, and then we would have a lower low, and that would bring into question whether we're going to test this 50-day moving average, which is now at about 38.5 or so. So realistically, it was a negative day, but really no damage done. I had also mentioned how the S&P 500 traded an inside day on Friday. That is, Friday's low was higher than Thursday's low, and Friday's high was lower than Thursday's high. So we had all the trading occur within one day, and that inside day, I said, often occurs near turning points as it represents distribution. And here we saw the same thing here. We had resistance up near this 134 level, and this was the support we were looking at about 133.30. You can see that did get broken, and now if it if this market stays below that level tomorrow, I think that we're going to see probably a little bit further pullback. And looking at the daily time frame, probably at least a test of the 20-day moving average at 132.10. So let's make that our initial target if we don't get a recovery back above 133.50 and stay there for a half hour or so tomorrow. That's the way I look at the S&P 500. But that clearly, this market has gotten extended. It's come up very close to our target for that inverted head and shoulders pattern, and a little profit taking is all we have, so far. Until the market proves otherwise. I still think, as I said yesterday, that we are in a high-risk environment, and there were some great opportunities today. First, let's take a look at the mid-caps, because I have been concerned about them, their inability to breach this 200-day moving average. It looked like the market was trying to break past this resistance that we've been monitoring in here, and now we're going to have to keep in mind this 50-day moving average at about 135.5 again. But certainly taking out, this is really the big important level, I think 133.5. And we're pretty far away from that thanks to last week's rally. But getting below that level, I think, really could send this market down hard and quick. So we're not out of the woods still for these mid-caps. They still banging around up in this area, more neutral than anything, but this weekly time frame is really what has me most concerned. Its inability to push past these levels, past the 140.5 level. Really, that's what it's going to take to get this thing bullish again. And the buyers just don't seem to have the conviction in this area of the market. And you can see that we had that initial sell-off. The market rallied up on very, very low volume here, right to that declining 5-day moving average, and then we had that continuation later in the day. So this market is weak right now, and I would expect that we're probably going to see a test of that 50-day moving average near 135.5 here in the next couple days. The semiconductors, as I said, have been holding up pretty good actually, and today I thought they held up better than the rest of the market as well. Though on the daily time frame, we do have a lower high. We do have these higher lows, so it looks like the trend is maybe starting to turn sideways, which is what I've been saying for the last couple of weeks anyways, is what I thought we would get. This 10-day moving average is about to cross down through the 20-day moving average. Moving average crossovers represent indecision, and that's basically what we have in here anyways, is sideways, choppy, indecisive trading. So it remains a trader's market, a stock picker's environment, and on the 10-minute time frame, we are starting to see, though, this series of lower highs and lower lows. So perhaps this is where we're going to see maybe a little flush out down towards that $33 level, and maybe that 50-day moving average comes up to meet the market. Overall, though, as far as the markets go, we remain in a high-risk environment. And, there's going to be stocks that keep getting blown up in here. And, we've seen, stocks like, well, look at Qualcomm today. Qualcomm, is getting smacked. It broke below this range right here. The stock looked like it was recovering, but the 10 crossed back down through that 20. The 50-day moving average hadn't really flattened out yet, and it was making lower highs anyways. So Qualcomm, guilty till proven innocent. Stock looks like hell. Amazon, you can say the same thing about. This looks very similar to Yahoo recently when it rallied back up to its prior level of support in here. And Amazon looks like it's really, on this monthly time frame, tracing out a very big top, very similar to, like I said, Yahoo. Here's a monthly chart, and here's a weekly chart of Yahoo right here. So Yahoo, this is where Yahoo was 2 weeks ago. I think that's very similar to where Amazon is right now. Any little piece of bad news in Amazon is going to send this thing back down quick to about 25, I think. And we're starting to see that the sellers are getting a little bit more aggressive and creating some resistance in this level. So we've seen, some big stocks, some high-profile stocks. Red Hat blew up on Friday, or I'm not Friday, but last week. People say, "Hey, why are you a trader?" Look at this stock Kyphon that I'd mentioned last week. We had a great trade on the long side in here on Friday. Why do I keep saying Friday? I think it was Thursday. And I had suggested taking profits up here. And look what happened to this thing. Completely fell apart. So we remain, and I am only pointing these stocks out because you have to be quick in this market. You have to be quick to take your profits. You have to be even quicker to take your losses. And let's take a look at some of the stocks we had open. Boom, BOOM. Here we're looking at this weekly time frame. I still think this thing could get cracked pretty darn hard. When these momentum stocks start to turn, they often turn very quickly. Hopefully we can get a little piece of bad news in here and the stock can gap down $20 or so, $10 or so. That would be ideal. Boom, though, what I suggested last week was selling it short below $32.75. That occurred right there at this point. I then suggested lowering your stop to $33.15. I think now that you can lower your stop to about $32.50. And again, I'm leaving a bigger stop on this one because I think it's something that we can hold for a few days and really clean up on a dollars per share amount. Rambus, RMBS, I had suggested this as a short sale candidate below 1755. Last Friday we got that. Our stop was then going to be at 1770. That hasn't been hit. I still think the stock can make it down towards this 1615 level or 1625. I think was my official target, and I said that I think that it could actually test this 50-day moving average. It's one of those stocks that's kind of, people said, hey, the market's rallying, what do we buy? Let's buy Rambus. That had a big move before. But now they're going to realize that Rambus is like any other stock, like Qualcomm, that just, it's still in a downtrend. The 50-day moving average is still declining. It's guilty till proven innocent. And I think that this makes a great short sale candidate, even from here if you're not in it. Let's lower our stop somewhat. We'll put our stop at $17.60. Again, giving it a little bit more room. And then all the stocks I'd mentioned yesterday, ACOR, ACOR, none of them met my entry parameters. I wanted to buy that above 935 initially. That didn't occur. China, CDC Corp, China, wanted to buy above 570. Didn't happen. No play there. TIBX What we were looking for was a pullback to 885 and then a move above 895. Today's high after that pullback was 894, so that never occurred. No reason to be involved in TIBX either. So, all those longs didn't cost us a penny. They're just ideas. Aspen Technology, damn, I mean, how many times have I said this looks like a good short, and I've been off by a day or two, and hopefully some of you are in it. I was looking for a slight rally in here today up to $11.10 and then sell short on weakness. That never occurred. The stock, I was looking for a $9.50 to $10 price target. We've hit that. What can you say? Hey, it's only good if you hit it. Just calling it doesn't do anyone any good, unless hopefully some of you guys were able to participate. CCJ Cameco, I was looking for a short-term rally up in this stock up to 36.70 or so, and that would have brought the stock to here. Obviously, that didn't occur, so we didn't get an official short sell in there. I did sell the stock short as it started declining in here, though. And again, don't look at my ideas and say, wow, that's the only way to play them. As the market, gives you more information, you have to adjust your trading plan. That article that I pointed out of Brett Steenbarger last week, flexibility is one of the most important things, traits you can have in the market. And LCAV, this one completely blew up. I had no clue they had news, I guess, after the close Friday, but news and surprises follows the direction of the trend. This is what happens to people who buy bad stocks. This is a bad stock. It was a bad stock before today. It was a bad stock for a while. Starting back in here when that 50-day moving average started turning lower, it was saying this guy's got problems. Stay away. Leave it for someone else. As a trader, you don't have to be in there. I also want to say that as far as those small speculative stocks that I mentioned on yesterday's video, I got absolutely zero feedback on that, so I guess I'm just going to discontinue mentioning those stocks. Check back this evening, and I'll have another video with ideas for tomorrow. Thanks.